It was supposed to be the biggest public offering of all time, finally giving global investors a chance to make money on Saudi Arabia's vast oil reserves. But now, because of a mix of geopolitics and royal intrigue, the IPO of Saudi Aramco, the national oil company of Saudi Arabia and by far the biggest energy company in the world, may be the IPO that never was. But we're getting ahead of ourselves. Let's go back to April 25th, 2016.
أيها الأخوة والأخوات، السلام عليكم ورحمة الله وبركاته. هذا تركي الدخيل يحييكم في هذه المقابلة الخاصة التي نجريها في قناة العربية مع ولي العهد السعودي الأمير محمد بن سلمان بن عبد العزيز. حياك الله اسمه الأمير. الله يسلمك.
This is Deputy Crown Prince Mohammed bin Salman. In April 2016, he unveiled his plan for the economic future of Saudi Arabia, Vision 2030. And while there's a lot that the country hopes to accomplish by 2030, most of these hopes hinged on the country putting 5% of Saudi Aramco on the public market. That's right. When we said the IPO would be the largest in history, that's only with the company putting 5% of itself up for sale. Wall Street analysts estimate Aramco's total market value is somewhere between $1 trillion and $1.5 trillion. And 5% of that would really help the country's economic outlook. The crash in crude oil prices that started in 2014 has taken a toll on Saudi Arabia. Oil accounts for roughly 97% of the country's export earnings. The sale of 5% of Saudi Aramco would offer a quick injection of revenue for the government to help diversify the economy. Right now, the country's economic future is entwined with oils. Vision 2030 is an attempt to change that. But the IPO fought an uphill battle from the start. Saudi Aramco currently only has just one stakeholder, the Saudi king. Until now, the company's assets have been a black box. And many suggest that the identification of a market value is not in the royals' best interest. Saudi Arabia has maintained for decades that it has 260.8 billion barrels of recoverable oil reserves. But that number has never fluctuated. Any changes would impact the valuation, and maybe not favorably. And then there are problems for potential shareholders. It could be risky to take on only a portion of a 5% minority stake in a company largely reporting to the needs of the Saudi government. But it seems as though an alternative to the IPO has gained momentum. The Financial Times reports that the oil mammoth may be considering a private share sale instead. The buyers? Analysts' best bet is China. And the deal makes sense. Saudi Aramco wouldn't need to publicly reveal anything, and China would have a new tap. Saudi Aramco, for its part, still insists the IPO process remains on track. But will letting in the light with an IPO really be worth it?